This video is brought to you by Answerly, a question platform that pays you for adding high-quality answers on different questions. The users are rewarded in Answerly tokens, which they can easily convert into dollars or any other cryptocurrency by using one of the exchanges mentioned in the description. Hello and welcome to our YouTube channel. In today's video, we'll be talking about Hillary Clinton crashing the crypto markets. Former Democratic presidential candidate Hillary Clinton spoke about Bitcoin and crypto's ability to weaken governments. Hillary Clinton characterized cryptocurrency as a threat while discussing competition between global powers during a panel of the Bloomberg New Economy Forum. Speaking about the rivalry between China and democracies in North America, Europe, and Australia, Clinton highlighted the rise of cryptocurrencies as being important and as deserving of attention as artificial intelligence. But before we dive deeper on Hillary Clinton about to crash the crypto markets, like this video, smash the subscribe button, and click the notification bell right now so you'll be aware of these warnings to Bitcoin investors. Hillary Clinton warned the rise of cryptocurrencies could threaten the status of the US dollar as the world's reserve currency and destabilize nations. When we're talking about making decisions and trying to be strategic and building alliances, there's a whole new layer of activity that could be extremely destabilizing, and in the wrong hands or alliances with the wrong people could be direct threats to many of our nation states and certainly to global currency markets, she said at the Bloomberg New Economy Forum in Singapore. Cryptocurrency, she said, quote, has the potential for undermining currencies, for undermining the role of the dollar as the reserve currency, for destabilizing nations. She didn't mention how or when this might occur or which countries could be affected. The broader context was a link between the use of cryptocurrency and threats posed by asymmetric power moves, specifically non-state actors exploiting cyber warfare or adversarial governments' use of mercenary rather than conventional armed forces. I think one of the areas that nation-states have got to pay greater attention to is the rise of these asymmetric power centers. Some of them operate either with the approval or even in full cooperation with state actors. Like you see with the Kremlin, some of them are independent. But we're going to be facing increasing challenges the way technology has developed. The incredible use of disinformation in the political sphere and the economic sphere is only going to get worse. The rise of artificial intelligence is going to threaten nation-states. It's going to threaten multinational corporations. In describing this rather big threat to nations and multinational corporations, Hillary betrayed the fact that she doesn't know the difference between Bitcoin and the separate asset class of cryptocurrencies. Bitcoin advocates quickly seized on the comments, although Clinton did not mention Bitcoin by name. Proponents by the large cryptocurrency have long contended that Bitcoin will ultimately displace the dollar as a global reserve currency. However, the overarching narrative for Bitcoin's growth in recent years is as a store of value asset akin to digital gold. Eric Peters, of One River Digital Asset Management, for example, expects that Bitcoin will eventually become way more valuable than gold, which is currently a $10 trillion asset. MicroStrategy CEO Michael Saylor thinks Bitcoin's market cap will reach as high as $100 trillion as it becomes the world's monetary index. He explained on CNBC Friday morning in New York, China has taken steps to clamp down on digital asset trading and ban Bitcoin mining. This has led to some members of Congress, such as Representative Tom Emmer, to conclude that it's in the United States' best interest to do the opposite. Looking beyond Bitcoin to the growing use of stablecoins, the US dollar is clearly dominant. USD-pegged stablecoins account for about $145 billion of the $147 billion worth of fiat-pegged assets currently on the market, according to CoinGecko. The top-ranked non-USD stablecoin, Synthetics' S-Euro, which is pegged to the euro, has a market cap of just $117 million. Singapore, where the Bloomberg Forum was hosted, has recently been cast as a home for alternative stablecoins. The co-founder of stablecoin issuer StraitsX told Blockworks in October that he believes that non-USD-pegged stablecoins may eventually account for a majority of the global total. Bitcoin assures anyone with internet access a decentralized, permissionless right to property that cannot be confiscated or censored by any government. No one on the Bitcoin network is forced to choose between updating their software or risk losing their wealth. It is backwards compatible. Bitcoin is geographically agnostic personal sovereign wealth fund. The other thousands of cryptocurrencies are centralized and largely unregulated assets whose protocol can be changed at any time. Thus, in crypto, the threat of property confiscation persists. Bitcoin and crypto are completely different asset classes. Therefore, when Hillary casually throws crypto in with her laundry list of threats to her political and economic worldview, she is categorically wrong. Cryptocurrencies cannot undermine fiat currencies or nation-states outright, because what they offer is fundamentally the same as fiat. which is an asset that can and is debased by governance. By comparison, most cryptocurrencies such as Bitcoin are controlled by non-state actors, and while investing in them is seen by many as a way to hedge against inflation, they're not bound by the same geopolitical realities as currencies distributed by states. Despite cryptocurrencies' growing popularity, some officials have expressed concerns the payment method can make it difficult for law enforcement to trace illicit activities. Last December, the Anti-Human Trafficking Intelligence Initiative released a report cautioning that the pseudo-anonymous nature of cryptocurrency could be used for human trafficking and other illicit purposes. Other leaders have also expressed skepticism about cryptocurrency. Earlier this week, Indian Prime Minister Narendra Modi said he had concerns about the technology ending up in the wrong hands, according to the Indian Express. Federal Reserve Chairman Jerome Powell said in July the Fed is evaluating the possibility of establishing a digital dollar, which could undermine cryptocurrency. Meanwhile, it's been another horror night for crypto investors in a punishing week for digital tokens. Now, Bitcoin is headed towards a dreaded threshold. After an already torrid week, Bitcoin prices fell to their lowest in more than a month overnight, suffering this decline at a time when technical indicators are showing that digital currency could be heading for even further losses. The largest cryptocurrency by market value dropped to as little as $56,668.50 today. CoinDesk data shows, meaning it had lost almost 18% of its value after hitting an all-time high of nearly $69,000 earlier this month. It has recovered slightly at the time of writing, but it was still down 4.2% over the past 24 hours to around $57,800. Other prominent coins have suffered considerable loss overnight too, amid a broad sell-off in cryptocurrency markets. The CoinDesk top 20 listed digital assets are all trading in the red. Ether, the native cryptocurrency of the Ethereum blockchain and the second largest overall, was down 4.2% over the past 24 hours, slipping below the key psychological level of $4,000 earlier in the night. XRP was down 3.47%, while Solana was down 6.27%. However, Bitcoin is up 45.59% over the past 6 months and 227.71% for the year. It comes as the Reserve Bank of Australia has warned crypto investors they risk holding speculative assets with niche uses that could lose most of their value. The RBA's head of payments, Tony Richards, said the value of many cryptocurrencies, which have surged to $2.6 trillion have been driven by fads and a fear of missing out, and could crash when central banks decide to assert control over their monetary systems. I think there are plausible scenarios where a range of actors could come together to significantly challenge the current fervor for cryptocurrencies so that the current speculative demand can begin to reverse, and much of the price increases of recent years could be unwound. He told the Australian Corporate Treasury Association, according to the FAR. The crypto market is famously volatile, but some analysts believe this latest dip spells big trouble for the digital currencies. John Iaduleka, the founder and CEO of multi-strategy fund Bands Capital, said if the digital currency falls below certain support levels, it could be headed for significant losses. $55,000 and $50,000 are very sensitive support levels right now, he said. I believe, namely, if the price of Bitcoin falls past $50,000, that this would indicate negative cyclic attributes for Bitcoin price, meaning that it could serve as an early signal that the digital currency is heading for a declining market. However, Dematic Dantes from CoinDesk says the pullback could be stabilized after falling further in the short term. If further declines materialized, the next level of price support is seen around $53,000, which could then stabilize the pullback based on a CoinDesk analysis, he wrote. For Bitcoin, upside momentum continues to slow on the daily price chart, suggesting continued profit-taking among buyers, and the Relative Strength Index, or RSI, on the daily chart is not yet oversold, which provides scopes for further downside in BTC over the short term. It's not yet clear what is causing the dramatic slide, but there are several factors that appear to be making investors think twice. Is Bitcoin a good investment for the future? Let's know your thoughts about this video in the comment section below. If you like this video, make sure to smash the like button and subscribe to this channel. To learn more about Answerly and Answerly tokens, check out the links in the description.